Thank you all for coming, and I appreciate those of you who showed up early and got a little bit of input on our lowdown. But we really are grateful for your attendance. We know how busy you are, and we don't waste a minute of your time. This is the Top Rated Seller webinar that is free for all eBay sellers. You are here to listen to the lowdown on income taxes for eBay sellers. This is session 1, the basics, and it's presented by Cliff Enico, a tax and legal expert, attorney, and eBay author, and also by Laura Messerschmidt. Laura is a financial industry expert from Outright.com. And a little housekeeping, got to keep everybody on their toes. Don't worry, this webinar is being recorded and will be available on our YouTube channel, and a link to the recording will be sent to all of you if you registered, even if you were not able to attend, or those of you attendee, you'll also get the link to the recording. We will be distributing the slides from this presentation as a PDF on the pagemage.com/top rated seller webinars site. If you're having audio problems on the computer, your best option is to try using your phone. Use the dial-in number. If you're already on your phone and you're having some issues with audio, hang up and call back in. We'll try it that way. Stay connected to the Top Rated Seller webinars. We would love to have you visit our website. Our new website is pagemage.com/top rated seller webinars. That is where you can sign up for our newsletter, get webinar info, all kinds of selling tips, seller advice, and education right there at pagemage.com/top rated seller webinars. We also have a Facebook group, over 530 members and growing, very active. Find it at facebook.com/groups/TRS webinars. Our next webinar is coming up soon, Wednesday, February 27th, same time, 11 a.m. Pacific time, 2 p.m. Eastern time. This will be the lowdown on income and sales taxes for eBay sellers, session 2, intermediate level, with our same presenters, Cliff Enico and Laura Messerschmidt. We hope to see you there. Register for that one at pagemage.com/top rated seller webinars. Our connectors for the webinar series are me, That Cat from thatcat.com, and Karen Locker, solutionsforecommerce.com. And our sponsors for this webinar series, very important, eBay Radio, helping you achieve and maintain top-rated seller status. You can check out eBay Radio at ebayradio.com. Outright pulls all your sales and expense together. Put your accounting on autopilot with Outright.com. Terapeak, because Terapeakers make more money. Terapeak sellers make more money on every sale. You can check it out at Terapeak.com. More sponsors, PageMage, the smart gallery app, where you can cross-sell targeted items in your eBay listings by category, keyword, and more. With Smart Gallery, you get to choose your promotions. Our other sponsor, Stamps.com, where you can import orders from multiple marketplaces, and they have a free application just for eBay sellers. Check it out at Stamps.com. The agenda, I'll turn it over to Laura so she can tell us exactly what we're going to learn today.
Great, thanks so much, Kat. We're glad to be here. So first, Cliff is going to give a quick overview of income taxes and give you some of the basics. Then I'll talk about minimizing your taxes and some expenses you can take, deductions, and cost of goods sold. After that, we'll talk about the Form 1099-K, which is a form that if you received one, you've probably already received it by now because it was required to be sent out at the end of the month, last month. So you should have that in your hands, and you might be wondering what to do with it. So we'll talk about that. We'll also talk about what's changed from last year to this year with the 1099-K. Then Cliff will jump in again and talk a little bit about online sales tax, although we'll keep the majority of that discussion for the February 27th visit, webinar. And then we'll also talk a little bit about Outright and how Outright works to help you with your taxes. Quick disclaimer, we are going to give you some information here, but it's not shouldn't be construed as legal advice because you do need to speak with a person that's registered in your state specifically, such as an accountant or a lawyer. So if you do have specific questions, please do consult your accountant or lawyer.
Yep. And let me just say one other thing too. If well, we are giving out information. This doesn't always reflect the views of Outright or any of our sponsors. So if you listen to something I say and you follow my suggestion and it ends up not working and you get audited by the IRS and you end up losing your house, your spouse divorces you, and you end up living in a diaper box under the Brooklyn Bridge, you cannot blame any of our sponsors. We are solely responsible for what we say on this program. Okay, well let's get a good start. But my whole interest in this area came about in 2005. Some people might remember I was very active on the eBay University faculty, and we did a program in 2005 in San Diego, a lovely hotel. I can't remember where it was. And during the Q&A, somebody actually came up, and we have these microphones standing in the middle of the room, and she said, "Cliff, this is interesting. I've been selling on eBay for about 5 years now. I've made about 200, maybe $225,000, in that time. At what point do you think I have a real business and should start paying taxes?" And of course, there was sort of like dead silence in the room. The problem with eBay is people start out thinking that it's a hobby. They get involved in it casually. Somebody, leaves them some stuff, or they have to clean out their mom's apartment, and they start selling stuff. And before you know it, things get a little bit out of hand, and they say, "Holy cow, I think I got to do something here, but I'm not exactly sure what I should do." The first question you ask yourself is this a business or is it a hobby? There are a lot of people who sell casually on eBay. They don't think of it as a business. They're just trying to make some extra beer money. The point here is that the IRS, if you're making money, if you are selling on eBay and you are making a profit, which you probably will sooner or later, the IRS does not care whether you classify it as a business or a hobby. They want your money. If you're making money doing anything, you are required to report that as income on your 1040 and pay taxes on it. If you look at your 1040 very closely, there's a line item, I think it's line 40, for hobby income, and that's where you report this item. So should you report it as a business or a hobby? I always tell my clients and eBay sellers generally, it's always better to be a business. File Schedule C on your 1040. That's income or loss from a trade or business for two reasons. When you are a business, you can take lots of deductions that hobbyists can't take. You can take all your ordinary and necessary business expenses. You can take the home office deduction. We're going to talk about that a little bit later. You can take all these deductions that hobbyists can't take. When you have a hobby, you can deduct certain things, but only if they're directly related to your hobby income. So if I sell a coin collection on Sotheby's, the cost of shipping those coins to Sotheby's just for sale, I could probably deduct, but I couldn't deduct anything else. But here's the best thing. If you lose money, it's a lot better to be a business than a hobby, because if you lose money, you can deduct those losses against other income that you get, including income from your day job. Moving on, how do you file returns and how do you pay taxes when you're selling on eBay? If you are the only person in your business, you're what they call a sole proprietor, or if you're in business with your spouse, it's only the two of you and there's nobody else, you file Schedule C, which is part of your Form 1040. That's due April 15th every year. If you are in partnership with somebody other than your spouse, a brother, sister, significant other, you may have to file a partnership return on Form 1065. Talk to your accountant about that. That is also due April 15th. So if you started in business last year and you're in partnership with someone other than the spouse, you may have to file a Form 1065 by April 15th. And then you and your partner also would file Schedule C on your individual 1040s. We'll talk a little bit more about partnerships later. You can extend the date for filing your tax returns by 6 months. But the thing you always have to remember about extensions, and this is true whether you're doing it individually or whether you have a business or whether it's a hobby, you can extend the time for filing your return, but if you owe taxes, if you owe the government money, you must make that payment by April 15th. You cannot extend your payment obligation. You can only extend the date for filing your return. That's true for partnerships as it is for individuals. Okay, we talk about profit. What do we mean? Okay, here's the formula. Basically, taxable income is your gross revenue, that's your gross merchandise sales, your GMS, if you're eBay sellers, less your cost of goods sold, your COGS, what you paid for your merchandise, your inventory that you sold on eBay, less all of your other ordinary and business expenses, that are deductible. Not all expenses are deductible, but if you're filing Schedule C, most of your ordinary and necessary business expenses are deductible. When you subtract those two things from gross revenue, that is your taxable income. That is what you pay taxes on at whatever your tax rate is. You do not pay tax on your gross merchandise sales. This is something that confuses a lot of people. We only tax net income in this country. We do not tax gross income. Okay, and when we talk about revenue, we mean your revenue is everything you earn, and we mean everything. The definition of gross income in the IRS is income derived from any source whatsoever. So even if you're selling on eBay and you only consider it a hobby and you're making money, the IRS wants you to report that income and pay taxes on it. Even though you're not filing Schedule C, you're not filing it as a business, you're filing it just as a hobby, they still want you to report your hobby income. If you don't do that and they catch you on audit, they get very nasty. That is when the baseball bats come out. Okay, let's talk about this concept of COGS because it confuses a lot of people. A lot of people think that you can deduct the cost of your inventory the moment you buy it. And that is not the case. What you have to do, COGS, which stands for cost of goods sold, it's whatever you paid for your inventory, plus shipping costs, plus storage and warehousing costs, plus sales taxes, if any. If those of you who are doing retail arbitrage, you buy stuff at retail and then you turn around, you sell it on eBay for even more money, your sales tax that you pay when you buy your inventory is included in part of your COGS. You deduct COGS when you sell something on eBay, not when you purchase it. So if you buy something and it's in your inventory for several months, it doesn't sell on eBay for a while, you cannot deduct the COGS until the item actually sells on eBay. At that time, you can deduct your COGS. Whatever you have in inventory at the end of the year is treated as an asset for tax purposes, and that's how you treat it. But that's a more advanced subject. We'll tackle that in the next webinar.
Thanks so much, Cliff. So
Let's
now I can
go ahead.
I can go ahead and talk about expenses. Yeah. So expenses are things that actually can be deducted when you have the expense. So these are things that don't go into making your item or the actual item itself. So what Cliff talked about with COGS, that's specifically things going into the item. Again, other expenses, you can deduct it right away, assuming that you're a cash-based business, which most of you are. And things that we see a lot of eBay sellers taking are things like shipping expense. That tends to be the biggest one. If you have any contractors working with you or helping you with your business, all of the amount of money that you pay those folks, that can be deducted. Same with if you're going to any craft fairs or any sort of fairs for your business, you can definitely deduct those. Fees, so if you have any Etsy, eBay, PayPal, Amazon fees that you pay, those are all deductible. And that's interestingly one of the things we see a lot of people missing. And the reason is because eBay, for example, when they pay you, they already take out those fees. And so sometimes you're not really aware that you are paying those fees as much because they're already taken out. So don't forget that those fees can be huge expenses that you can take off. And then some folks will take transportation and other things like that. Basically, anything that any expenses that you have for your business. Deductions. So deductions are also things that you can take off, but they're not necessarily cash outlays. So they're things that are, basically that you're not necessarily paying cash for, but that you can still deduct from your taxes. And actually, if you want a complete list of the deductions, you can actually check out Cliff Einico's book. It's eBay Sellers Tax and Legal Answer Book is the name of his book. And he's going to kill me for doing this, but I figured I'd throw in a quick plug on his book because it's really great.
I'm blushing. I'm blushing.
I would highly recommend it. It has very detailed chapters on all the deductions you can take, including drop shipping, terms and conditions, consignment contracts, all those different things. And it's pretty cheap and usually can be deductible because it's a business expense. So I just thought I'd throw that in there. Sorry, Cliff.
No, I am blushing. I am blushing. I'm actually very proud of this book, too. I understand that this has become sort of the Bible for eBay sellers, and I'm very proud of that.
Great.
On tax issues, anyway.
Yeah, exactly. So, and I'll talk about a few of the deductions that we see a lot of eBay sellers taking. The home office deduction. So this is where if you actually have a part of your house that you're using for your business, you can actually take a part of your rent, your utilities, and other household expenses off of your taxes through something called the home office deduction. You can also do mortgage interest And you can't actually do your mortgage payment, although there are some complex issues that come up if you try to do your mortgage payment. So you definitely would want to talk to an accountant if you're considering the mortgage payment.
Yeah.
So the way you do it is you actually go and you measure out the part of your area or your home office. You measure it out, you figure out exactly how much it is. You take that percentage, and that's the percent of your rent and other utilities that you can deduct.
Yeah, and let's talk about that for a second. When we talk about the percentage, we're talking about a fraction. It's the square feet of your home office divided by the total square feet in your home measured wall to wall. So if your home office is 200 square feet and your home is 1,000 square feet, lucky you, from wall to wall, you can deduct 20%, 2 divided by 20% of virtually all your household expenses. There are a couple of exceptions, as Laura points out, but you can deduct pretty much everything.
Yep, and I would recommend, some people, what I've seen them do is they'll actually take tape and put it around their home office so that they can sort of measure out exactly where their home office is.
Duct tape can save your life. It's yet another example.
Yeah, the IRS is pretty picky, and they want to make sure that you're only using your home office for your home office and not for personal use. So, for example, if you try to take out an entire room and there's a bed in that room, the IRS will say, no, 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 that bed is not for business use, and therefore you can't take that off of your taxes.
Yeah, a very good rule of thumb, by the way, Laura, for eBay sellers is if it's something that you wouldn't have in a real office or a cubicle, don't put it in your home office. So a stereo system, a CD player, absolutely. Some people have that in their office. Pictures of your spouse and kids, I think you better have that in your home office. You'll be in deeper trouble than the IRS. But a crib or a doggy bed, no, unless of course it's a seeing eye dog or a working dog of some kind that the IRS will always be tolerant of.
Yeah. And we would recommend that you take a photo of your home office. It only takes a few seconds to take a photo, and then you'll have that if you ever need it for the IRS or to show your accountant, different things like that. It can be really handy to have that photo if you're going to take this deduction.
Mm-hmm. Absolutely.
Another thing I'd mention is that about a month ago, the IRS made an announcement that they're going to simplify the home office deduction for next year. Yeah, yay. So it doesn't apply for this year. This year it's still the same. But next year you can get a set deduction of $1,500 off of your taxes if you have a home office. And the paperwork that's going to be required for that is going to be significantly reduced. And so even if you're not taking one this year, you really might want to consider whether you can set up a home office for this year now for your 2013 taxes, because you can easily take $1,500 off of your taxes.
That's right. And even if you're losing money, you can still take the home office deduction. Remember, if you're filing a Schedule C, your losses can be applied against your other income, like your income from your day job.
Great. So let's move to the next one. Contribute to retirement. So a lot of people are surprised to hear that eBay sellers and other self-employed folks can actually set up a retirement plan and can start saving for retirement. And that allows you to defer your profits and your taxes until retirement. So it can be a great option for some folks. And the two plans you can sign up for, one's called an individual 401k and one's called a SEP IRA. You can Google either of those or go to your bank. It's pretty easy to set up. And once you set it up, you can put some portion of your profits into that retirement plan and use it for retirement.
Yeah. So, and one of the great things about this, Laura, is this is one of the few places where the IRS will let you defer payment if you go on extension. So if you file your taxes and you go on extension for 6 months, you can actually set up an individual 401k or a SEP IRA on October 14th, make a contribution to it, and that contribution will be deductible for the prior tax year.
Yeah, which is great. I've actually seen a lot of people do that when they start filing their taxes and realizing that they owe a bunch of money and they weren't expecting it. Instead of paying those taxes, they'll put some into a retirement plan and then take it deducted off of their taxes. So it can be a great option even if you hadn't planned in advance and you really wanted to do this. Mm-hmm. So definitely something to consider. Another case that I see a lot is if an eBay seller has a spouse that's working full-time. They may use the spouse's income to live off of and then use the eBay funds to put into one of these retirement plans. The last one I wanted to talk about is mileage. Interestingly, Outright did a study last year to see what deductions people were missing and found that the mileage deduction was actually the most missed deduction for eBay sellers. So it's definitely one that if you try to track it and actually start tracking this, it can be really great. And there's a few different ways to track mileage. You can download an app called MileBug, which works for the Android. And then Outright actually has an app for the iPhone, both of which are free and both of which will allow you to track your mileage. If you don't like using a smartphone, I would suggest tracking your odometer. I've seen people they'll take a little notebook and they'll write down the odometer at the start and the end of the business trips. I've even seen people use day planners where they'll write in every time they go to the post office and then at the end of the year add it up. So really, it's whatever works for you to track it, and whatever you find the easiest to do, that's what you should do. And then what you can do is you can deduct 55.5 cents per mile driven for business. And I think it is going to go up, I think, in June of this year.
Correct. Yep.
Or, it is an or, it's not an and. You can take the actual vehicle expenses. We do find, though, that actual vehicle expenses, for one, doesn't give you as much of a deduction usually, and two, is much harder to track because now you've got questions of, well, what do you do if, how do you know how much of of that gas, for example, went to a business trip versus a personal trip? And there's a lot of intermixing that happens for folks that can get really confusing. And so we do recommend taking that 55.5 cents if you are going to consider this. Yeah. I mean, that would definitely be...
For most people, that would be easier. Of course, if you drive an old 25-year-old jalopy like I do, I just got my antique plates, actually, for the state of Connecticut. It's really cool. Where the car's like in the garage like every month or something like that, your actual vehicle expenses may actually be more than the mileage allowance will give you. And it does make life a little bit easier because you don't have to calculate exactly how much you did on business versus personal. This can get a little bit tricky. I always like to give an example, Laura, of how this works. Let's say you're doing a triangle trip. You start out at your home office. You go to the UPS store to send some packages out to eBay buyers, and then you go and you drop your kid off from school, and you then go back to your home office. Let's say you do a two-stop trip like that. And by the way, do not get those two chores confused. Do not leave the kid at the UPS store and drop the packages off at your kid's school. I mean, they will not appreciate that in either place. But let's say that you do that. What the IRS says is that you can deduct the cost of your trip from the home office to the UPS store and back again. The side trip to drop your kid off at school is considered personal, and you cannot deduct that portion of the trip. So that's just an example of how, if a trip is partly business. Let's put it this way: our lives, when you work for yourself, Laura, your business life and your personal life are totally commingled every day. But the IRS does require that you be somewhat disciplined about this. If you're taking the mileage deduction, get yourself a mileage log. You can actually get these on eBay. Or Outright has a feature. Make sure you use it and update it daily. Don't just do what a lot of people do and just look at your odometer on April 14th and figure out, okay, I've been driving about 10,000 miles this last year. Probably half of that was for business, so that's what I'm going to report. That is absolutely the wrong way to do your mileage deduction, and the IRS will not buy that.
Great, thanks, Cliff. So going back to the agenda, just to remind you guys of where you are, we've talked about income taxes, the overview, and also how to minimize your taxes through expenses, cost of goods sold, and deductions. So the next topic is, what do you do if you get a Form 1099-K? So this is what the 1099-K looks like. It's a form that PayPal will send to the IRS and to you, and it reports your total revenues for the year to the IRS. So it's a pretty important form because the IRS is going to get a copy of this. They usually send it the last week of January, so you should all have it. And do note that other online payment providers will also send this. So some of you may have received one from Amazon. You may have received one even from Etsy. And what it'll do is it'll report your sales only if you have more than $20,000 or more in sales and 200 or more items sold. So you do have to hit both of those. So for example, if you're selling automobiles on eBay and you only sell 5 of them, but you make $100,000, you would not get one of these forms. And it does include all of your PayPal accounts. So it doesn't matter how many PayPal accounts you have. If you've opened them under the same tax ID, PayPal will sum them up. And if you meet these totals or above, they'll send you one of these forms. And it's really important to know what's included. As Cliff mentioned before, that the IRS considers every single form of income to be revenue. And that's how they expect you reported on your taxes, and therefore that's how they report it onto the 1099-K. So for example, all of the shipping revenue you make is included in those numbers. All the sales tax you collect is in those numbers. If you get a fraudulent payment that then is reversed later, the original payment will still be in those numbers. Same with returns and refunds, those types of things. All of those are already in the numbers. So it really is your full revenue for the year. And chances are if you got one of these, you might have been surprised by the number that was on there because it's so high and you're not necessarily expecting it.
Yeah,
but again,
that's an important point to just stress. The 1099-K only reports your gross income. It does not report what you actually have to pay taxes on. You have to report that on your 1040 on your Schedule C.
Yeah, exactly. And that's why when we talked earlier about all the deductions, expenses, all that stuff that you can take, you have to make sure to deduct all of that out of here. So for example, with shipping revenue, the converse is the shipping cost, which you would take off on your taxes. The sales tax you collect, you'd have to take that off on your taxes. Same with returns, refunds, and fraudulent payments. All that stuff is taken off of the amount that you're going to pay taxes on, but it's up to you to do that if you get a 1099-K.
Yeah,
and I should say, even if you don't get a 1099-K.
Yeah, well, and let's make that point, Laura, because this is very important. Let's say that you didn't meet the threshold, the 20,000 and the 200 transactions, so you did not get a 1099-K. That does not mean that you are excused from paying taxes for the year. It's not that is not a get-out-of-jail-free card by any means. It just means that you did not meet the threshold for getting a 1099-K from PayPal. If you made $10,000 a year in profit selling on eBay, you are required to report that and pay taxes on that, even though PayPal did not send you a 1099-K.
Yeah, what I've seen people get in trouble with or sort of have issues with when they're not getting a 1099-K and then they start getting one later on in their business when they've hit those levels, what will happen is sometimes they won't be calculating their own revenue in their own books this way and thinking about it this way. And so they'll take out all the fees and the shipping revenue and report sort of more of a net income rather than the full income. And it's important not to do that because once you hit the 1099-K level, you'll be kicking yourself because that number on the 1099-K will be so much higher than what you've got on your own book.
Yeah. No, it is scary, and a lot of people think that they have to pay tax on that, and they freak out, and they don't. But the burden is on you, though, to report your deductions, your COGS, and all the stuff that gets you down to taxable income. That will not be on the 1099-K form or any other 1099 for that matter. We're going to talk more about 1099s in our next program in a couple of weeks. Actually, we have a whole segment on that.
Yep, exactly. And just a quick note on how do you handle the 1099-K. So first you want to reconcile your 1099-K. And by this I actually mean that make sure you understand what's on there. Because chances are that PayPal got your 1099-K right. We've met the team that works on this at PayPal, and they are religiously trying to get these right. So chances are it's right, but you need to understand what's in there and really understand this concept that Cliff and I have been talking about what's included, because that will help you to figure out what expenses and deductions you can take off and help you make sure you don't miss any. The second is make sure to take all those expenses, some of the ones that Cliff and I talked about, but also just any other expenses you have for your business. Same with deductions. You got to take that mileage deduction. You got to take the home office deduction. All of those will lower your taxes and lower the amount that you're taxed on. So that's really important to consider and make sure that you do that, especially if you're getting a 1099-K. The final one is a really important point, which is that we want you to double check something. Specifically, this is what it is. You want to check on your Schedule C that the income that you're reporting exceeds or matches what's on your 1099-Ks. So if you've got two 1099-Ks, you should add those up. And whatever number you've got, you want to make sure that that income you're reporting on your Schedule C is higher than what's on those 1099-Ks. And the reason this is so critical is because the IRS made an announcement I believe it was in September of last year, and they said that this year one of the major reasons they will be doing audits is for people who underreport their income as compared to their 1099-Ks.
Yeah,
so
that's true.
It's
in fact,
a huge
historically, that has been the biggest reason people get audited. They only report $100,000 of income, but the total on all the W-2s and 1099s that are attached to their return is $150,000. That is an easy thing to check, and if you are audited for that reason, you should consider yourself a Dummkopf or something like that. Intelligent people should not make that mistake. It only takes 5 minutes to get your 1099s, your W-2s with an adding machine or a calculator and total them up and make sure that the gross income line on page 1 of your 1040 is at least equal to that amount. Just taking the 5 minutes out to do that will reduce your risk of audit very significantly.
And last year this wasn't the case, because last year they sent out 1099Ks, but since they weren't sure it was the first year they were doing it, they didn't do audits based on this. This year, from what we believe, they actually have a computer program that's going to just do the double checking and spit out the names of people who are under, and then those people will get audited.
Automatically, yeah. No,
yeah.
So that's true. So just take 5 minutes out, do it the old-fashioned way with a calculator or use Outright, but 5 minutes before you head out to the post office to mail your return in, just make sure that you've reported at least that amount of income that shows up on your 1099s, your W-2s, your K-1s if you're in a partnership, and any other document that reports your gross income. The IRS does not like it when you underreport income. They do not consider that a harmless mistake. They figure as an adult human being, you should know how to add a column of figures. Most of us, not through fourth grade, so we should be able to do that.
And I would say if you only take one thing away from this seminar, take this away, because it's that important. It really is critical, given that an audit is just not fun, and this is probably the #1 reason why you might get audited. And it's just not fun, and it's not fun to deal with, and it takes a lot of time. Luckily, most of you won't get audited, and if you don't make this mistake, there's a good chance you won't get audited. So I would highly, highly recommend paying attention to this. All right, Cliff, now I'll let you take this on sales tax.
Okay, changing gears now. Laura and I have been talking about income tax up until now, but there's another set of taxes that you have to be aware of when you're selling on eBay, and those are sales and use taxes. We're going to be talking about this a lot more in our next presentation, but just to cover some basics, because we know some of you here attended this program specifically to get some basic sales tax advice. And here are the basics. If your state has a sales tax, not all do, but if you have a sales tax in your state, you must collect sales tax whenever you sell to people in your state. So if you're in Connecticut, if that's where your business is located, and you sell something on eBay to a Connecticut resident, you are required to collect and pay sales tax on that item if it is a taxable item. Every state has exemptions. So, for example, in Connecticut, the first $50 of clothing purchases are not subject to sales tax. But if you sell a $100 blazer or something on eBay to somebody in Connecticut, the same state that you live, you are required to collect and pay sales tax on that transaction. There is no internet exception. This is something a lot of people are confused about. They feel, oh, I'm selling it on the web, the buyer could be from anywhere, so sales tax does not apply. That is not true. Even though you're selling the item on eBay, if the buyer is in the same state that you are, you have to collect and pay your state's sales tax. Now, what if the buyer's in another state? Let's say you're in Connecticut and the buyer's in Wyoming. Under current law, you do not have to collect sales tax when you make an interstate or international sale to somebody who lives in another state or another country. But there's an exception to that. If you have a physical presence in another state, what the law calls a nexus is just a funny word for a connection, a link of some kind. Laura and I have a nexus on this conversation. That's what that word means in plain English. But if you have a physical presence in another state, you must collect and pay that state's sales tax whenever you sell to people in that state. So what do we mean by a physical presence? Let's say you're in Connecticut, but you have a P.O. box in New York for your customer's convenience or something, or a UPS store, private mailbox address. If you have a physical presence in another state, even a P.O. box, you are required to collect New York state and local sales taxes whenever you sell to someone in New York. What if your merchandise is stored in a warehouse in another state? Let's say you sell out of Connecticut, but everything ships out of a warehouse in Pennsylvania. You have nexus in Pennsylvania, so that means whenever a Pennsylvania resident buys from you, you are required to collect and pay Pennsylvania sales tax. And the last situation that eBay sellers commonly get into, if you are a drop shipper, if you're drop shipping for somebody else, or if you take consignments, you're an eBay trading assistant, you have nexus wherever the person who consigns you the merchandise is located. So if you're in New York State and you take a consignment of goods from a sweet little old lady in New Jersey, you are required to collect and pay New York sales tax whenever you sell to a New York person, and New Jersey residents whenever a New Jersey sales taxes whenever a New Jersey person buys from you. I'll say that one more time. If you're in New York and you take a consignment of goods from somebody in New Jersey, you have to collect and pay New York sales tax whenever you sell to a New York resident, and you also have to collect and pay New Jersey resident sales taxes when you sell to a resident of New Jersey. The law considers the New Jersey person to be an extension of your office. You're acting as that person's agent, and that's why you have nexus in New Jersey, but only for those transactions, for those consigned goods. You don't have nexus in New Jersey for all of the rest of your stuff. Nexus is a very complicated topic, and we know it confuses a lot of eBay sellers. We're going to devote a whole segment of our next program to this topic because it is so important for eBay sellers.
Yeah, and one thing I would add is that when you have Nexus, or when you get Nexus in a state, you have it forever, and you have it across your business. So, for example, if you're storing merchandise for your eBay business in a warehouse in another state, and you get Nexus, it's not just on your eBay sales; it's sort of any other sales you may do to that state.
That is true. That is true. And it doesn't matter where you ship the stuff from. It doesn't matter that you ship it from New York to Pennsylvania. If you've got stuff in a Pennsylvania warehouse, you have Nexus in Pennsylvania for all purposes.
Yep. And some of the states have started to get aggressive about cracking down on this. So in the past, you were supposed to do this, but maybe the states didn't crack down as much. But now with the issues the states have been having with budgets, they've tended to get more aggressive.
They sure have. I always tease, Laura, that there are two kinds of states in the Union today. All 50 states are financially bankrupt, but there are some that are morally bankrupt as well. And most of us, unfortunately, live in one of those states. They are getting just incredibly aggressive in collecting and enforcing these laws. These are not new laws. These laws have been on the books since the 1940s, 1950s, but they are getting very aggressive now about enforcing this stuff. And a sales tax audit is one of the most painful experiences, I think, that you can go through, because at least the IRS has intelligent, educated people that do their audits. But some of these people at the state level who audit sales and use taxes, a lot of them are political hacks. They're a cousin of the governor or something, somebody that they wanted to put him in some place where he wouldn't do too much damage, so they make him a sales tax auditor. I mean, you can't count on these people always having the brains that the IRS people do.
I won't tell them that you said that, but definitely we're going to talk more about this on February 27th, because we'll go into detail on some of these things and talk specifically about what to do if you're an Amazon FBA seller, because there are some issues there with merchandise being stored in warehouses. So now we'll spend about 5 minutes talking about Outright, and then we'll move on to the question and answer portion. So real quick, Outright is an online bookkeeping tool for eBay sellers. You can get it on the App Center within eBay. So it's just under My eBay, you go to Applications, and you'll see Outright there. It's usually one of the featured apps, but you can also find it in the most popular free apps. We're there as well. Then when you sign up for it, what will happen is it'll show up on your My eBay under Applications. What it'll ask you to do is it'll ask you to connect your PayPal account through a read-only one-way connection, meaning that we can't transact on PayPal. We're just getting the information from PayPal. And what we'll do is we'll pull down that information every night. And what will happen is you'll get a profit and loss out of that. And so we'll keep this up to date every night, so anytime you log in, you can see how your business is doing. What we'll do here is you can see all of your income that comes in. And you can actually see what that item was sold. So if you want to see a specific sale and understand what it is, you can actually click in and see that information so that you get a sense of what all of your sales are. And we also pull in all of your expenses. So if you have a PayPal debit card, that'll come in automatically. You can also add additional credit cards or bank statements, banks that you have. You can connect those to Outright as well if you want to. Again, it's all read-only, so we're just getting the information and putting it in here. And then we automatically categorize it into the right tax categories so that you don't have to do any work. You can just look and see. You can change those categories if you don't like the one that we picked, and then the system will learn. So if you change it once, it'll ask you, do you want to change it every time this vendor comes in? And you can choose. And then what we do is we show you reporting. One tip I give people is make sure to check your spending report, and also there's one called your biggest vendors report up here. Those two reports in specific I would mention for eBay sellers because it's great to get a sense of where your expenses are and try to figure out how you can reduce those expenses. And with the vendor report, you can see who you're spending the most amount of money with and go and negotiate with those folks to say, hey, I spent $1,000 with you last year. I think I deserve a discount because I'm one of your big customers. And we've seen that people will have a great chance of success with doing that with vendors because the vendors want to keep you happy. We also have a sales by state report, and what I recommend for people with this, particularly if you're an eBay seller, which all of you are, what you can do is you can take a look at where your expenses are going, or where your sales are going, I should say, and set your auctions based on that. So here you can see California and Florida are two big areas where I'm selling a lot, and so I might want to do some items that are specific to California and Florida. For example, a University of Florida t-shirt might do well for some of my customers. And also, just as a comment, someone asked, "What do you do if you have to separate business and personal?" Generally, from a tax perspective, you are supposed to keep business expenses separate from personal expenses. That's always a best practice, and that the IRS likes. If you're not doing that and you are combining them, which a lot of people do, even though they're not supposed to, you can mark it as personal with an outright, and we'll keep the transaction in there so that you have a record of it and so that you can reconcile, but you will be able to, that won't affect your business reporting, so that'll take it out of the business reports. And then in our paid version of Outright, which is includes the Taxes tab, and it's $9.95 a month for the paid version. Everything I just showed you was all the free version. The paid version will include your Schedule C worksheet with everything put into the proper lines on your Schedule C, as well as information about your quarterly taxes and estimated taxes, and some of your sales tax reports as well. Also, I just mentioned we do have a mobile app. It is free and it's for the iPhone. We'll have the Android soon. We get asked that a lot. And even if you're not using Outright, I would recommend downloading this app if you want to use it for tracking mileage, because so many people miss that mileage deduction. And whatever method you can do to get your mileage tracked will save you a lot of money. So I'd highly recommend either using the Outright mobile app for that, or you can use MileBug, as I mentioned before, is another great app. And now time for the questions. Kat or Karen, are there any questions that have come in?
And we have questions. All right, let's start with the very beginning. Well, you answered one. Is there an Outright app for Android? So the first question is for Cliff. How do I handle cost of goods for inventory I paid for last year, but didn't include in my ending inventory last year and sold it this year?
Okay. The question basically is how do you handle COGS when you have stuff from last year that has been held over? The answer is that you handle it the same way you do anything else. You deduct the COGS when the item sells on eBay. It doesn't matter when you bought the item. Or whether or not you included it in inventory. You're supposed to, but if you didn't, that's a different question. The question, though, about how you handle COGS is an easy one. You treat it the same as you always do. You deduct the COGS when the item sells on eBay. And you should keep track of this. A question that I frequently get asked, by the way, is what happens when I don't remember how much I paid for something? Let's say that I was cleaning out my mom's attic and I found something that she had for 50 years. I mean, it was a gift. I didn't pay anything for it. How do I handle COGS? Well, there's two ways you can do it. You can do a rough estimate. The IRS will allow you to estimate, what things, are worth, when your mom died and she passed this thing on to you. As long as it's within the ballpark, as long as you're not claiming, a $5,000, expense for a $100 piece of junk jewelry, the IRS will probably buy it as long as it's somewhat reasonable. But if you really, really don't know, what I tell people to do is just treat the cost of goods sold as zero. For an item like that. Yes, you're paying a little too much to the IRS, but the IRS will never complain about you overpaying taxes. And chances are you probably did underestimate some other stuff too, so it'll probably just net out in the long run.
Okay. Next question. I received a 1099-K from PayPal with my personal Social Security number as the taxpayer ID. All of our sales are related to our legally established corporation. If I send this in with our business tax return, will it be an issue?
So
That's an
I would say
interesting
actually,
one.
Yeah, yes, it could be an issue. Usually what you do is you basically call PayPal and ask them to reissue it under the new tax ID number. Because they do look, the IRS does expect that the addresses, for example, and the name will match exactly, and if it doesn't, it could cause an issue. And so what will happen is if you don't report that on your personal tax return and you put it on your corporate, but the 1099K is for your personal, then that might create an audit. And so that's why you would want to call PayPal and ask them to reissue with the new number.
Yeah, that's especially important too, Laura, because corporations have to file their taxes by March 15th, not April 15th. It's a different filing date for corporations and S corps. This happens to a lot of people. They set up their PayPal account in their own name, and then they form an LLC or corporation with a tax ID number, and they forget to give the tax ID number to PayPal. That is something that, this problem will happen if you don't update your information with PayPal. Make sure that they know that you're using a tax ID number and not your Social Security number. I also recommend, by the way, that even if you're a sole proprietor, you should be using a tax ID number, not your social. Even though the IRS allows you to use your social, because you're going to be giving that number out to a lot of people down the road. And forgive me, as much as I love everybody on this call, there's not a single one of you that I would like to know I would feel comfortable knowing my Social Security number.
Yep. And I would add that I've had people call PayPal about this and ask them to change it. They usually will. Sometimes you do need to ask to speak to a supervisor. So, attempt to get the first person you get, but you may have to ask to speak to a supervisor because sometimes they're not quite sure how to handle that. So they will do it. Just make sure that you get escalated if they won't help you on the first line of support.
Okay. Let's see. Scrolling back up here. I'm selling many of my mother's collectibles for her. How do I put a cost if we no longer have the original receipt? And I know you talked about that a little, Cliff.
Yeah, just to reinforce that, you really have two choices here. You can take a stab at what things were worth back then. There are websites, and also this is a good source for TerraPeak. Too, you can search TerraPeak and find out what similar items have sold for on eBay within the last year or 2 years, and you can use that as an estimate. As long as there's some reasonable basis for your estimate, the IRS will probably buy it. Or if you're really, really not sure, you can just use zero and pay a couple of bucks extra in taxes than you should. But in the long run, it all nets out anyway because you probably underestimated on some other items, and it'll all net out in the long run. Don't obsess about it, but make an effort. With tools like TerraPeak, it's really easy now to find out what the market value of antiques and collectibles are, and it's a worthwhile investment and probably fully deductible too.
Okay, Cliff, back to that last question. The problem is that the person didn't include it in their ending inventory last year. With the how do they handle the cost of goods on something? They did not include it, so it was a carryover, but that wasn't in their inventory numbers.
Okay. That's really more of an accounting question than a legal or a tax question, but that's a good question for her. I'm gonna pass that question on to her accountant because there may be an issue if she filed a tax return with the incorrect information. She may have to go back and amend that return to reflect the correct year-end inventory if that was the case. And I just don't know enough information to be able to speak to that.
Okay, thank you. Next thing. And this is about business losses. There was a discussion in the question box about how a business can only be claimed as a loss for 3 out of 5 years, and after that, then your business really isn't a business but a hobby. Can you just address that a little bit, Cliff?
Yes, I mean the IRS has a set of rules as to when something is a business or a hobby, and generally speaking, if you don't make a profit within 3 years, there's a presumption that you're engaged in a hobby and not a business, but you can overcome that presumption by showing that you're treating your business seriously. So, for example, I will tell clients sometimes form an LLC or a corporation for your business because people don't do that for your hobbies. You don't incorporate a coin collection or a stamp collection. Start keeping good books and records. That's the most important thing. When the IRS audits you on this, the first thing they look for is documentation. If you're treating things casually, if all you have is a shoebox full of receipts and you're writing things on the backs of envelopes, they're not going to buy that. They're going to see that as a hobby more than a business. But generally speaking, if you're profitable, the surest way to be treated as a business is just to make a profit. In the first year that you conduct your business. But if you're not profitable for 2 years in a row when you're, especially if you're deducting heavy losses, that's when you're going to get on the IRS's radar screen. So if you've claimed significant losses for 2 years running, I would really try to make a profit this year, or really start keeping good records, form an LLC. There's about a dozen things you can do that will show the IRS that you're trying. You're just not very, you're not a very good business person, but you are a business person, and they should treat you as such.
Okay. And the questions are still coming in. Anybody who's sending in questions, I'm adding them to the list. Okay. What do we run into issues with deducting home office when we sell our home?
The answer is you used to. It used to be the case that, let's put it this way. The answer is no, unless you depreciate your house. When you take the home office deduction, one of the things that the home office deduction allows you to do, although it's not required, is you can depreciate your home. If you depreciate your home as part of the home office deduction, there may be a recapture of some of that depreciation when you sell your house, but there's a threshold. It only applies over a certain dollar amount, and I frankly don't remember offhand what the dollar amount is. So if you're not sure about this, if you're less than 5 years away from selling your home, you know you're going to be retiring, moving to Florida, whatever, I would advise a client not to depreciate your home to avoid the whole recapture issue. But if you're not depreciating your home, then there's absolutely nothing to worry about there.
And this will get a lot simpler next year with the easier laws that the IRS has passed now for the next year.
Yeah, no kidding.
Cool.
Yeah, another cool question, by the way. This actually is a question I get fairly frequently. Can you deduct space in somebody else's home? Let's say you don't have a seller, but your neighbor does, and they're nice people, and they let you store some of your inventory there. Can you deduct space in somebody else's home? The answer is no, you cannot. Not for the home office deduction, but what you can do, and this is a really cool trick, do a lease. Get a lawyer to do like a one-page lease of the space and pay rent on the space every month. You can deduct the rent payments for the storage space, just like you could a Westies storage unit or something like that. But you can't deduct space in somebody else's house. If you try that, the IRS will just say, "Nice try."
Okay, and here's two more questions that kind of go together about home office deductions. If you have low sales, should you still deduct 100% for the home office deduction?
Okay, the answer to that one is a bit technical. It depends. You can only have one home office, but you can have a home office for a part of the year. So let's say you're 6 months in Connecticut and 6 months in Florida, what we call a snowbird. You can deduct the home office in Connecticut for the 6 months that you're in Connecticut and a home office in Florida for the 6 months that you're in Florida. The trickier question there is going to be nexus for sales tax. I would think that you would have nexus for sales tax in both states, although Florida, I don't think Florida has a sales tax, or if it does, it's very
it does.
It does? Okay,
Yep.
but it's pretty manageable. That's the trickier question when you're splitting it. You cannot have two home offices though at the same time.
Okay. So then the other question, and actually it worked out to three. So this person, they have low eBay sales, and they use their home office for that, but they also do some work from home for their day job. So what can they deduct as part for the eBay business? How's that for complicated?
Well, the answer is it complicates your life. What you're going to have to do is you're going to have to keep records of how much time you spend on your eBay business versus how much time you spend on other activities. It's the same with computers. If you're trying to deduct a computer for a home-based business, and you also use it for personal purposes, you're required to allocate the amount of time that you spend on business as opposed to personal things. I'm a big believer in having separate dedicated things for your eBay business. So for example, so we did see there was a question about credit cards, for example. Should you have a dedicated credit card to your eBay business? And I think the short answer is yes. You should. Try to segregate as much as possible your business life from your personal life. It all comes down to record keeping. If you ever are audited by the IRS, the people who survive IRS audits are always the people who keep good records. It's all about record keeping. So as long as you keep good records and as long as you can demonstrate that you are only deducting that portion of the time of the computer time that is actually being spent on your business activities, you should survive an IRS audit if God forbid that should ever happen. But try to keep things as separate. Have a separate checking account for your eBay business, a separate tax ID number if you're a sole proprietor, separate credit cards. Although the one thing with credit cards, though, keep in mind that if you have an LLC or corporation, I don't know a single credit card company that will issue a card to just your company. They will want you personally on the card as well. So the card will say something like XYZ Corporation, Clifford R. Enico. If they don't get their payment every month, they want to come after you personally, and they're not going to rely on your corporation or LLC that only has $50 in its checking account. But there's no law that says you can't use that card strictly for business expenses, and I would make the effort to do so wherever possible.
Yeah, and even if you just have two personal credit cards, you can use one for personal and one for business.
Yeah,
just whatever you need to do. And it's really good, even not just for audits, but also for your own knowledge of your business to see what's going on. It makes it a lot easier for you to see how your business is doing throughout the year.
Mm-hmm. That's good. Here's a question that I frequently get.
If I did not track my mileage last year, is there?
Oh. You did not track your mileage last year?
Go ahead, Cliff.
No, I'm sorry. Here's a question that I frequently get asked, and it's one of the most fun questions I ever get asked. Can you deduct your dog as a guard dog? Believe it or not, the IRS has rules on this, believe it or not. The rules are as follows. It has to be certain breeds only qualify or certain mixed breeds qualify. If your dog is smaller than your inventory, it probably won't qualify. The dog must actually be used to guard the inventory. So if the inventory is in your basement, but the dog is in a doghouse in the backyard, that won't fly. The dog has to actually be guarding the inventory. It has to be of a vicious propensity. And the dog, the good news is if you have a qualifying guard dog, you can deduct all the expenses related to the dog, like the vet bills and the food and all that stuff, but you cannot deduct the dog itself. What you have to do is you must depreciate the dog over its useful life. And the useful life of a dog is the average life expectancy of that particular breed or mix as determined by a local breeder in writing. You basically got to get a letter from a breeder saying roughly how long you can expect this dog to live. So I actually had to ask the IRS for clarification on this because the question kept coming up in my eBay things, and I really couldn't believe that they had a set of rules almost a page long on whether or not. And by the way, I don't care how mean and ugly your cat is, you cannot deduct a guard cat, at least under current IRS regulations.
Okay. Now, if you didn't track your mileage last year, is there a way you can still claim the mileage?
Well, you can always claim it, but the trick is going to come down to documentation. So what you're going to have to do is some kind of a rough estimate, and it's almost certain to be challenged on audit. I don't know, Laura, what are your thoughts?
Yep, I was going to say I've seen a couple people be able to do this. What they've done is they've actually gone back and they've looked at their credit card receipts and seen, for example, when did they spend money at a craft store and when did they spend money at the post office. And then we're able to calculate their mileage from that. And that was a valid record for the IRS because they said, hey, this is the day I went to the post office. The post office is 10 miles away. Therefore, it's a 20-mile round trip, and they can deduct that. And so you can do it. It's a lot harder. So definitely, even if you don't deduct it for this year, start considering tracking it now so that you'll have those records at the end of this year.
Okay. And then they were talking, we're into the 1099K, which has lots of questions always. Are the shipping charges that the eBay seller paid, are they included in the amount?
No. So the 1099K only gets your revenue, and so it'll include anything that was paid to you. So any customer that paid you revenue for shipping, that would be on the 1099K, and then your job is to figure out how much did you actually pay to ship it out, and that's what your job is to write that down on your tax return and take that off of your taxes.
Okay. So then the next question was, how would the IRS know you have income if PayPal does not send them a 1099K?
They will find out. I'm laughing. They will find out on audit. Let me sort of wax eloquent on this. There's two ways you can foul up on your income tax. You can either not report all the income that you make, or you can exaggerate your deductions and your deductible expenses. If you're going to foul up on your taxes, by far the better way to do it is to exaggerate your deductions. The IRS is actually fairly forgiving on that. They understand that some of the rules for some of the deductions are pretty complicated, and even experts make mistakes with those sometimes. Some of the more complicated deductions, like the home office deduction, sometimes people make mistakes, and they're fairly forgiving on that. But they are not forgiving at all of people who underreport their income. Their feeling is, if you're in a business especially where you don't take a lot of cash, where all you get is checks and credit card statements, merchant account statements, the very first thing they're going to ask for when they audit you is copies of those statements. They're going to ask you for copies of all those statements, your bank account, your checking account statements, all that stuff. So there's no place to hide. They will find out if you are underreporting income, and they do not take kindly to that. They feel that as an adult human being, you should be able to know all the money that you make and report it correctly. I would much rather, if a client is concerned about paying too much in taxes, I would much rather that they report every penny they make, and then maybe get a little creative on some of their deductions, because there's a chance that the IRS might buy some of those deductions on audit. I would rather they go that way than not report all their income.
Okay. I missed this one back when we were doing the home office. This person rents an office warehouse space and doesn't take the home office deduction. She reports her business income on the Schedule C, but her husband works from home for convenience of his employer and would meet the home office test. But she's told she can't use the deduction for his home office because of her rented space. How is that for a complicated question?
These questions always get thorny and thorny. I think the answer to that is that the husband and wife should be filing separate Schedule Cs. That this is not the same business. It sounds like the husband has his business and she has her business. If I'm correct about that, there's no limit to the amount of Schedule Cs you can put on a single tax return. I think last year I had 5 Schedule Cs on mine because of all the different things I do. There are some things I can deduct as a speaker that I cannot deduct as a lawyer, and so I keep those things separate. I think that's the answer to that question. Laura, do you have any thoughts on that?
Yeah, I would agree that I've seen people like that, but definitely it's something probably to talk to your accountant as well, because there may be some intricacies there.
Yeah. So, for example, as a lawyer, I really cannot take a lot of entertainment deductions because most of the times my clients are taking me out to dinner. That's one of the reasons I look the way I do. But as a professional speaker, I frequently have to entertain clients. So I like to keep those separate so the IRS doesn't wrinkle their nose saying, wait a minute, he's a solo lawyer. Why is he claiming so much in entertainment deductions? I want to make the explanation as easy as possible. I don't want IRS examiners thinking too much.
I'm glad actually you said that, Cliff, because I wasn't even thinking about that. And I do sales and I also do service, work for other people. And I really probably should start keeping those separate because one, it's a lot more complicated with cost of goods, and the other is just simply payments.
Yeah, especially if you're doing like a retail business and a service business, I think those should be two separate Schedule Cs because those charts of account are going to look very different. The outright files for those two businesses are going to look very different. I'm sure of that. Here's Cliff Enico's rule, by the way, when it comes to taking deductions. People ask me, what are the audit triggers? What are the deductions I have to watch out for? This is not the law, but this is a good rule of thumb. The more fun an activity is, the less likely the IRS will let you deduct it. And that may sound a little cynical or funny, but I think it's really true. The expenses that the IRS really tends to zero in on with like a laser beam, with an electron microscope, are the travel, the entertainment, that kind of stuff. Because let's face it, IRS examiners lead very dull, boring lives. You're talking about somebody in the basement of a huge complex somewhere in Nebraska. All this person does is look at return after return after return after return, and they see, that you're taking trips to Spain and deducting them, and you had a picture of sangria at a Bolero thing, and you were deducting that because you were entertaining a client, or so you're reporting, and these people are jealous as hell of your way of life. They want to get even with you. They want to bring you down to their level. And that's kind of, I say, so seriously, if you're worried about getting audited, don't claim a lot of fun deductions. Let the IRS think that your life is just as miserable as theirs, and they'll probably give you a buy. They'll say, this person's one of us. They're suffering as much as we are. We'll let this go. Forgive the humor there, but there's a little bit of reality to that too. You don't want to claim a lot of deductions that will get the IRS examiner jealous of your lifestyle.
And just a quick program note, we'll stay on and answer a few more questions, but we are over time, so if anyone wants to drop off, we will not be offended. And we will post the questions later as well.
Yeah, there's a lot of questions. Okay, let's see. Laura, this is a question for you. Why does the outright total income differ from box 1 on a 1099-K? Why would it?
It may not be exact, and the reason is because PayPal, they take out some very specific things. Like they've got, if somebody marks a payment to you as personal, they may take that out. So generally what you'll see is the outright numbers will be slightly higher than what PayPal reports because of that. But you shouldn't worry about that. Again, you should report the total revenue that you've got and then take out anything that you need to take out.
And that's perfect because that answered Beth's question, does PayPal include personal payments as income?
Yep, and no, they do not. That's the one there's like 8 different categories of things that they take out, and that's one of them, and the other 7 are things that most people wouldn't have. But they're very minor sort of PayPal quirks. And that's also why even if you're not using outright, any of your books may not exactly match your 1099-K, and you shouldn't worry too much about that.
Yeah, because it's always, I know mine was when I was doing mine. Okay, this person has a home office and made a little over $5,000 last year, and they've been confused about how to go about becoming a sole proprietor. So how just briefly, how do you do that?
Okay. Well, first of all, if you have a birth certificate and a pulse, and you're over the age of 18, you are a sole proprietor. There's nothing to do to create a sole proprietorship. Your mom and dad did that some years ago when they gave birth to you. What the real question is, there's nothing you really need to do to form a sole proprietorship. What you do is you start filing Schedule C on your tax return. That's number one. Number two, you can use your Social Security number as a tax ID on Schedule C, but I don't like that in general. I advise my clients to get a federal tax ID number. That's like a Social Security number for a business. No two have exactly the same number. You can get this from the IRS.gov. They give them away for free, and use that number. The other thing you need to know about is if you're using a trade name, the law in your state usually requires that you file a trade name certificate somewhere. So here in Connecticut, we file with the town clerk's office. In some states, you file with the county clerk's office. But it's a real simple thing. You just go to town hall, you ask for the town clerk's office, and you say, and you fill out a piece of paper that basically says, I, Cliff Enico, am doing business at thus and such an address using the trade name Flibberty Gibbet Antiques. Love and kisses, me, and I pay a $5 fee. You're putting the world on notice that if anybody ever gets run over by a truck that says Flibberty Gibbet Antiques, this is the person who should be sued. And the law does require that if you're using a trade name or a fictitious name, that you register it somewhere. You got to check with a local attorney or accountant to find out exactly where. But that's all you have to do. There's no formation process for a sole proprietor.
Okay. Laura, does Outright keep track of all the different states that sales tax is collected from? This person's only seen a total, not broken up by state.
So it doesn't on the sales tax report. It just shows the total. What I've seen people do is they'll go, Kat Simpson in particular does this, go into the sales by state report, which is in the free version of Outright. That's under reports. And then you can click over from chart to table, and then you can see all of the sales that you've had in each state, and that's how you can calculate it.
So that is still in the free version?
Yeah. Mm-hmm.
Okay. All right. Because that was a question earlier, and I thought all the reports were going to the paid, so I may have
no, the reporting is in the free version.
Reporting is in the free version. So what? And they were asking about what is in the paid version, and also asking about the special that you were talking about coming in February.
Yep. So that includes all of the taxes in there, and then also the some of the historical data. And for folks on eBay, there is going to be a special price on that. I'm not sure exactly what it is, but I believe it's a 50% discount that'll come over to you via email. And that should come within the next week if it hasn't come already.
Okay. If I paid sales tax on an item when I bought it, do I have to charge sales tax in my own state?
Okay, the answer is yes. If you're selling to somebody who lives in the same state that you do, there are sales taxes on used merchandise. The last time you bought a used car, did you have to pay sales tax to the dealer? The answer is
Sure
obviously
did.
yes. So that's the answer. The thing you need to know though is that every state has exemptions. First of all, your state has you only have to worry about sales tax if your state has a sales tax. Some states do not. New Hampshire, for example, does not. That's one I know about. I think Tennessee doesn't have one either. There's a couple of states that don't. The other thing is the item subject to tax? So every state has a list of exemptions, and they're very political. So, for example, the first $50 of clothing, items of clothing that are less than $50 are exempt from sales tax in Connecticut. So you don't have to collect sales tax if you're selling a $10 T-shirt in Connecticut. But every the state laws are all over the place, and you really got to really marry a local accountant who's familiar with the sales tax rules, who can tell you in specific cases whether items are taxable or not.
Yeah, and when you're shopping in your own state, you pay sales tax on some things.
Yeah, I mean, there are sales taxes on used items. I mean, it doesn't matter whether the item is new or used. The question is are the buyer and the seller in the same
Massachusetts,
state?
we don't pay
Karen,
sales tax. It's tricky.
Karen, we lost almost all of what you said.
Yes. Oh, I'm sorry.
That's okay.
What I was saying
Cliff
is
got it.
okay, thank you. All right. Cliff, should PayPal and eBay fees be included and shipping be included in cost of goods sold?
The answer is yes, absolutely. All of those would normally be included in COGS.
Okay. If I have Nexus in another state, does that mean I'm now liable for income tax reporting in that state too?
Okay, that is a complex question, and you really need to ask your accountant about that. Generally speaking, Nexus for income tax has to be somewhat broader than Nexus for sales tax. Just about anything, any kind of physical presence will create Nexus for sales tax, but Nexus for income tax is considerably broader in most states. The connection with the state has to be more substantial, but you really have to talk to an accountant and have them look at the rules of the particular state.
Okay. If I quit storing items in another state, does Nexus disappear?
The Nexus will the short answer is yes. It will disappear at the end of whatever the current sales tax period is in that state. So if you file quarterly in another state and you pull out of that state, it would end at the end of that quarter. You would still be responsible for filing a sales tax return for that quarter in which you pulled out of state.
Okay, Cliff, Laura was saying earlier that once you establish Nexus, it's forever. And now you're saying that once you don't have merchandise there, it goes away. So let's clarify that for folks because...
No, absolutely. I don't think we meant to say that sales tax Nexus is forever. What Laura was saying, and she's absolutely right, is that it applies to your entire business. It's not just your eBay selling.
Okay.
It applies to everything you do. So if you're selling stuff elsewhere other than on eBay and you're selling to people in that state, you would have to collect and pay sales tax on those transactions as well, even though it's just your eBay stuff you have at a warehouse somewhere.
Okay, so Laura and Cliff, if I am paying taxes in Pennsylvania and I decide to stop selling on Amazon FBA, pull all my inventory back, I no longer have inventory in Pennsylvania, do I need to somehow notify the Pennsylvania taxing authority that I am no longer have a nexus in their state, and how do I do that?
Okay, the answer is yes. In Pennsylvania, which I happen to know, when you file your last sales tax return, there's usually a box on the form that says, is this the last return? Make sure you check that box and notify the state that you are no longer have a physical presence. Most sales tax return forms have a box like that, and if you can't find it, talk to a local accountant. In some states, you may have to write a letter to the tax authority notifying them. I think that's true in some of the Midwestern states. Find out from a local from an accountant what it is you have to do. But the short answer is yes. You can't just stop filing returns and expect that they won't try to reach out and get in touch with you.
And that's very important because you will get fined. So just so people know, if you don't do that, you will get fined because they'll think that you're turning in your forms late.
Right, and even just a warning, even though you're paying sales tax of $1.34 or $6.82, the fines are usually a minimum of $50.
Correct.
It's not chump change.
And they're usually by day that it's late even. So
Beth,
it can add up.
Beth Churkowski says in New York you have to die and submit your death certificate.
An invitation to the funeral will not be sufficient in New York State. No, remember, some states are morally bankrupt as well as financially bankrupt.
Oh, my goodness.
We were channeling that. We were channeling that, Cliff.
All right. What does the IRS require to prove COGS, cost of goods? This person buys a lot from thrift stores and estate sales and doesn't always have receipts.
Okay. The question is, what happens if you buy a lot of stuff at tag sales? The IRS will let you allocate. So let's say, for example, you go to a flea market and there's this cute little old lady with a bunch of stuff, and you peel off a couple of $100 bills and buy her entire inventory. You are not required in all cases to allocate a specific COGS to each item. What you can do is you can simply take the total amount that you paid and divide it by 50. They will accept that in a situation. That's one example I can think of. Do your best efforts to estimate, but if you can't, the IRS will accept a reasonable allocation if you buy, like estate lots and bulk lots and stuff like that. So, for example, if you go to an estate sale and you buy 50 baseball cards or something, I mean, the IRS will let you allocate, the expense among the 50 baseball cards. But if there's a Mickey Mantle rookie card in there, you should know your merchandise enough to know that the COGS on that probably you should probably allocate maybe a little bit more to that card than to the other stuff.
And I'm glad you answered that, because I have a lot of people that ask me. I bought especially I've been doing some recording of people's inventory costs for them. I bought this whole box at this box lot at an auction. I don't know how to decide.
Right. How to allocate.
How to assign cost of an item.
Yeah, and that's it. The IRS will accept any reasonable method. So ask an accountant what might be possible, but especially for bulk purchases.
Karen, we got really bad feedback on you. Okay, everybody still here?
Yes.
Okay. The lady wanted to know, tagging on to the tag sale, what kind of proof? And you're saying, Cliff, you are. Any reasonable facsimile of proof. Is that what you're meaning, Cliff? Like a note that you've written with the date on it, that kind of thing?
Oh, yeah. I mean, I used to help my mom with flea markets all the time, and whenever somebody bought more than 3 or 4 items, we always did a little receipt. It was a handwritten thing that my mom would sign saying, this will confirm that you bought 2 pieces of turquoise jewelry and 1, slightly cracked piggy bank from the 1950s. I mean, I would actually do it in real time just so that the person would have something, if they were reselling. Try to get something in writing. It doesn't have to be, it can just be something handwritten on an 8.5 by 11 page. When I used to do, tag sales and stuff, I would always carry a legal pad around with me. I mean, being a lawyer, of course, I have a plentiful supply of those. And I would just sort of, I would pick my items. I would just write a quick thing, purchased from Joe Blow, 123 Main Street, Fairfield, Connecticut, and then list the items. Then I would have them sign off on it with the total amount that I paid, just so that I would have something to show the IRS, so that the IRS guy won't think I'm just making up numbers.
Absolutely. Okay, 2 last questions real quick, and I know we've missed some. If we've missed your question, rest assured that we will go through the questions again after the webinar. We will get together a Q&A to publish, and we will get some answers for those we've missed from Laura and Cliff. So stay tuned. We'll get a PDF to you as soon as we can. But these last 2 that Karen has given to me, can you offset Schedule C income with losses from other sources such as investment losses, Cliff?
That is a tricky question, and it depends on the circumstances.
Okay.
Whether you can. I mean, generally speaking, investment losses, if they are capital losses, can only be netted against capital gains and a certain amount of ordinary income. So I would almost have to look at your tax return to answer that question. Sorry.
Okay, and one for Laura. Does Outright work with other platforms or just eBay?
Yeah, we work with eBay, Amazon, and Etsy are the big ones. Obviously PayPal, and then we have a lot of smaller ones like Big Cartel and things like that. And we're constantly adding new ones. We also see that some folks will add their bank or their credit card account where they've got other platforms coming in on those, and they can catch the revenues and expenses that way.
And I love having my bank account attached there. Thank you outright. And one other fun question we'll close out on. Again, if we missed your question, trust us, we will get them to Laura and Cliff. We'll get a PDF with the answers for you. But one fun one to end on, one of our friends and our attendees, Alex, had a wonderful wedding, and he ended up getting $50,000 in wedding gifts, which, yay, Alex. But however, when PayPal sent him that 1099, it included that 50,000. So does he have to pay taxes on that as business income? How does he fix that on his record, on his report?
So what?
Okay, go ahead.
I was going to say, so normally what I suggest in those sorts of cases is that you do report the income and then take it off on one of the other lines, which is not ideal, but you really want to make sure that the income that you report is above what's on the 1099K.
Fantastic. And Alex is giving us advice. If we want to get $50,000 for our next event, we should try honeyfund.com.
Good to know.
Thanks, everybody. Karen is having audio issues. She just told me I am pulling the question log. We're going to make sure we get all of those questions out, and we really appreciate your time. Be sure, if you want to come to the Intermediate Advanced course in 2 weeks,